Good afternoon, students. Today we are discussing about another concept of banking company, that is prudential norms on income recognition and asset classification. Basically, when we are talking about asset classification, there are basically two type of assets under a banking company. One is performing asset, another is non-performing asset. Here the asset stands for, as we know that a bank is providing loan to the customers. So if the customer is paying a loan on time, then that is called performing asset. If the customer is not giving amount of or providing an amount to the bank for 90 days or more than 90 days, then that is known as non-performing asset. So we will discuss how we can use various prudential norms on income recognition and asset classification. So first of all, we'll proceed with the introduction part. In India, prior to 1992, banks used to recognize interest on entire position of loans and advances, irrespective of fact that whether each of the loan advance is good or bad. This has resulted into the following drawbacks. Basically, if I'm talking about 1991, before 1991, there is no LPG. LPG stands for liberalization, privatization, and globalization. So the banks, most of the banks come into existence after 1991 because privatization comes into the banking sector also. So here, there are following drawbacks. The bank used to recognize interest on bad loans or bad debts. Due to recognition of interest on income on entire loans and advances, it was difficult to analyze balance sheet to understand the actual financial health of the business or bank. Bank used to pay income tax even on the portion of interest pertaining on the bad loans. It was difficult to fix the accountability on bank staff in respect of bad loans advanced. So basically, that was the drawbacks before 1992, but nowadays that can be improved. So in 1992, Reserve Bank of India set up a committee under a leadership of M. Narasimhan. We know that committee forms one uh, you can say policy, that is known as Narasimhan Committee uh, or Narasimha Committee, to report a financial system of the bank. Policy of the income recognition should be objective of bank based on record of recovery was one of the major or one of the main recommendation of this committee. Consequent to the report of M. Narasimhan Committee, Reserve Bank started issuing guidelines on the concept of income recognition, asset classification, provisioning pertaining to the advances. These provisions amend from time to time, are being popularly called as IRAC norms. The guidelines issued by Reserve Bank of India made it compulsory to the bank to identify the bad loans, which are nowadays called as non-performing asset, and prohibited the bank from recognizing interest on the portion of bad loans. Further, it also made it mandatory to make suitable provision for these bad loans. So there are steps to apply guidelines. First of all, we have to classify the assets or advances among performing and non-performing advances. Then second step is recognize interest on performing assets, and the third one is reverse interest on non-performing asset, as we will charge some penalty or charge some fine on non-performing assets or non-performing advances. Then fourth one is start accounting the interest on non-performing advances after receipt of the money. Make suitable provisions on performing and non-performing advances. Then there is a part of income recognition, how we can identify. So banks may recognize income on actual accrual basis in respect of the standard project under implementation, and may not recognize income in respect of substandard projects. Substandard projects here basically known as doubtful. Banks are required to reverse the interest recognized in past wrongly. Full provision should be made in respect of funded interest in respect of NPA project recognized as income. Income from NPA asset is to be recognized only when it is actually received. However, interest on advances against the term deposits, NSC, KVP, NSC stands for National Saving Certificates, KVP stands for Kisan Vikas Patra, and life policies may be taken into account on due date provided adequate margin is available in account. On an account including bill purchase and discounted and government guaranteed accounts turning NPA, bank should reverse the interest already charged and not collected by debiting profit and loss account and stop further application of interest. For example, fees, commission and similar income in respect of past period, if uncollected, need to be reversed. So how we can classify on the basis of income recognition on the various assets. First of all, that should be categorized into three columns. One is advances oblique assets, because advances are treated as assets for the bank. The second one is condition, and the third one is income recognition. So against term deposit, NSC, KVP, etc., condition is basically they mark some margin. For example, if the term deposit is for rupees 1 lakh and they provide a loan on that term deposit, that may be known as overdraft facility. So they will provide 90% or 80% or 75% loan against that deposit. So available margin is 10%, 20% or 25% respectively in the said cases. So here income recognition is accrual on the due date. That should be accrue on due date. So the second one is outstanding debt reschedule. So here condition is extension of reschedule credit. That should be given by the bank. That is a choice of bank. Either they will give or they will not reschedule. Or the income recognition is accrual on the date. Advances granted by the government. So condition is if they are non-performing, actual or amount recovered should be treated as income recognition. The fourth one is NPA. There is no condition, as that is not applicable for any condition. So actual or amount recovered should be treated as income recognition. Reverse of income. Here how we can reverse the income. If any advance become NPA, the interest on such advances accrued and credited to income account in the past period should be reversed if the same is not realized. How we can reverse the income? Here again there are three columns: income oblique asset, second is nature, third is impact. So first one is a fee, commission and similar incomes on NPA. Nature is accrued in the current period, so impact is that should be reversed as that is the NPA. The second one is finance income on leased asset. If that is not recovered, accrued or credited before NPA, so that should be impact again is reversed. So out of order. An account need to be treated as out of order, that is also known as a dormant account. If we cannot transact for a particular period, that should be into the terms and condition of the bank. That should be treated as a dormant account or out of order account. So I will read again. An account needs to be treated as out of order if outstanding balance remain continuously in excess of the sanction limit drawing power. For example, uh, as I have taken example of fixed deposit, if the fixed deposit amount is rupees 1 lakh and the overdraft facility should be given, draft facility should be given as 90%, that means 90,000 rupees. So if that sanctioned limit should be crossed, then the bank has a right to uh, mark it as out of order account. In case where the outstanding balance is principal in the principal operating account is less than the sanctioned amount, but there is no credit continuously for 90 days, as the date of the balance sheet or credit are not enough to recover the interest debited during the same period, these accounts should be treated as out of order. Means if the balance should if the interest should not be paid for 90 days or more than 90 days, then that should be treated as out of order account. Next is overdue amount. Overdue amount is unpaid amount due to the bank under any credit facility on due date. Later on, any amount which remain overdue after a definite time becoming non-performing asset. So this includes interest as well as principal amount. Then that should be categorized. How we can find out how we can classify the non-performing assets, how we can identify that is a non-performing or not. An asset including a leased asset ceases to generate income is treated as non-performing asset. A loan or an advance is classified as non-performing asset as under nature of facility. Number one is term loan. Here the parameter is interest or installment of principal remain overdue beyond 90 days. That should be treated as non-performing. Overdraft oblique cash credit remains out of order as indicated above. Bill of exchange or discounted remains overdue beyond 90 days. Crop loans, short-term duration loans, installment of principal or interest thereon remains overdue for two crop seasons. Crop loans, long-term duration, installment of principal thereon remains overdue for one crop season. Securitization transaction, amount of liquidity facility remain outstanding beyond 90 days. Derivative transaction, overdue receivable representing positive mark to market valuable of the derivative contract which remains unpaid beyond 90 days from specified due date for the payment. So these are the conditions for non performing assets under a banking business. So you can write these headings and you have to write the parameters for finding or for, you can say, classify as a non-performing asset. So there is a classification of non-performing assets as under how we can write. Number one is substandard assets remained NPA for period not less than or equal to 1 year. In such a case, the current net worth of the borrower, guarantor, or market value of the security charged is not enough to ensure recovery of the bank dues, likely to sustain some losses if deficiencies are not corrected. Doubtful assets remained in substandard category beyond 1 year. Recovery is highly questionable and improbable. Loss assets, assets considered uncollectible or of little value but not written off wholly by the bank, continuance as bankable asset although it may have some salvage or recovery value. These assets we can describe under a non-performing assets in the next chapter, next topic under a banking company. So, appropriation of recovery in NPA. Interest realized on NPA may be taken to income account provided the credit in the accounts towards interest are not out of fresh additional credit facility sanctioned to the borrower concerned. Basically, this can be checked through CIBIL report. In the absence of the clear agreement between the banks and the borrower for the purpose of appropriation of recoveries in NPAs, bank should adopt an accounting principle and exercise the right of appropriation of recoveries in uniform and consistent manner. Interest application. How interest should be applicable on an account turning NPA, bank should reverse the interest already charged and not collected by debiting profit and loss account, stop further application of interest. Bank may continue to record such accrued interest in memorandum account in their books. For the purpose of computing gross advances, interest recorded in the memorandum account should not be taken into account. So this is the topic under income recognition. As we have discussed these slides, so there are some prudential norms on income recognition and asset classification. Further, we will discuss the various types of you can say provisions which are provided against non-performing assets in the next lecture. If you have any query, you can ask me by calling or by texting a message to me. Thank you for listening.